All right, what's up, guys? What's up, guys? Welcome to another webinar. So I'm kind of done for the year, especially in terms of like full risk. I'm really right now just kind of stress testing like a lot of setups. If I see a setup, any kind of setup, I want to take it and see what the result is going to be because like there's this notion, right, of December being like a bad PA month and this and that, which is relatively true to an extent. Um, but there's like a couple of factors that come into play. It's like, for one, how many Decembers have you traded? Two, how have you improved each year based on skill set, based on models, based on the efficiency of you taking your trades that are based on your model, and how let's just say that the models that you're trading this year may not be the models that you're trading last year, the year before that. So like after 1, 2, 3, 4 years of trading the same models over December, is that then enough data for you to justify not trading December? You know what I mean? Because for example, I used to be super against trading December back in this is like a couple of years ago. And that same year there was a bunch of great setups. So was I wrong to not trade the month of December? Maybe, maybe not. But it was really more so a belief that I had just because like one of the first Decembers that I ever traded back in like 2018. Like I vividly remember I think it was Christmas. There was some news event. I don't know if it was NZD news or USD news, but I was trading NU and spreads just went crazy, like 40 pip like spreads, and that just kind of gave me like a PTSD. But obviously I got over it. It only took like a couple years, but got over it. So I just want to now make sure that my a predetermined notion of saying that I'm not going to trade December is not necessarily going to be based on just PTSD. It's going to be based on, hey, based on the models that I trade and based on the approach that I look at, it just doesn't make sense right now. And if I see a market start to kind of consolidate, especially like on a minor major intraday standpoint, then yeah, I probably will just stop looking at it because there's really no point. But because it's kind of like a bit of what UCAD was kind of doing. We can look at that here in a bit. But yeah, let's just go ahead and get started, guys. I don't want to rant on too much about that, but whenever you think of trading or not trading December, so far the first almost 3 weeks now, it's been decent PA, you know what I mean, especially across the board from indices to commodities to FX, you know what I mean? So just some food for thought right there, right? So let's go ahead and get started. So scenario number one, this is a loss this week, right? Where I will say I'm picking a reversal, but the reversal is technically justified. And whenever we're whenever I'm looking for an execution, right? Obviously outside of the framework, right? I'm looking at essentially my bias and my execution. My bias is based on market structure and internal sweeps or external sweeps, depending on the type of time frame that we're looking at, right? So clearly we are bearish, but internally we have not only high momentum that broke structure, but we also have a internal sweep. This internal sweep is causing the timing for me. So now my execution is then based on right a minor SD here or just a minor LG here. So as soon as I see this internal push up, then I kind of see the justification of this to go higher, at least to here. So I ended up getting a decent reaction here, right? Actually, yeah, there you go. So I ended up getting a short stop here, pretty much a small minor loss. And I kind of was gonna close a bit early, especially once I saw that we rejected here and then we had a pretty big M5 engulfing there. So once I kind of saw that, I'm like, yeah, this is probably just going to go against me. So I just put my short stop and just kind of let it ride, right? Like I kind of got over the habit of just closing based on just a minor confirmation. Like I would much rather take a small loss with the anticipation of me being wrong and this kind of just keep going because that's kind of like the whole point, right? Like I'm trying to take a position because I'm anticipating this to go higher. But yeah, I ended up just letting that hit short stop. And like just a small review that I did is just like rather than reversal chasing internally based on this, which I believe was a news move, was yesterday morning's news move. Um, I still have to assume I have to force the continuation, right? That's kind of like the the difficult part about trading a fractal market, because obviously the internal models is the same as the external models, but although we have high momentum internally, I still have to force the continuation externally. Um, and that's speaking from, let's say, a minor intraday and a scalp, right? So if my minor intraday is bearish, then I kind of want to try to force the continuation to the downside with my scalp structure. So technically now my short stop kind of validates the original bias here. So this should realistically look for something lower. And I think that's sort of what happened. Let's go ahead and check that out here. With the nature of our entries, would it make sense in this scenario to go break even if the new invalidation is so close? What do you mean? I don't know what you mean by that.
You say you took a small loss, so I was asking if you took that like because you took a small loss, your new invalidation point was a little bit closer to your entry. So I was gonna ask, would it be justified to just move your stop to break even if it's that close,
No,
just
no,
to preserve
just no.
capital?
I don't. I mean, this little bit of capital isn't going to make a difference, bro. But what will make a difference is if my invalidation is, let's say, here and not here. Let's just say we didn't have this internal move and we kind of just had an internal continuation and we didn't have the little sweep here. Then my invalidation would here. So can I argue that I could put my stop loss to break even? No, because I don't go stop loss to break even. My invalidation is always the structure point.
Understood.
Yeah, because it just a lot of the times, I just think it's practicing better habits. Like I don't want to go break even when my invalidation is can't be a break even. You know what I mean? Like let's just say
Because
we had another structure like
bad
here,
psychology
like this.
or bad
No, it's not bad.
habits into
It's not bad
psychology.
psychology. It's just a rule, bro. Like it's just a rule. Like it doesn't make sense. Like let's just say I had another leg here, and then we had another move here, and then we had another. Let's just say there's an internal LG here. So let's just say that from there, I can now move my stop loss to here, but you can technically at this point put your stop loss to break even, but that doesn't make sense because we have the rule based on solidified points. So like you would have to move your stop here in stop profit. So I don't believe in that break even scenario, right? I believe in looking for structure points or looking for some type of invalidation to 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 the entire scenario. I don't want to just preserve capital. I want to preserve the scenario, if that makes sense. So
Certainly, it sounds
if
like you're
this
staying engaged with the trade throughout the whole process,
not
like
really,
from
bro. I'll
beginning,
check
from
it every
execution to
not
closing.
really. Not really. I'll check it like every 10 minutes.
So would you say it's like, okay, so 10 minutes makes sense.
I
So
mean,
that
yeah.
like, because I'm
I'm a
thinking
scalper,
in
bro.
terms of like
Like if I'm an
intervals.
intraday trader, it's
Yeah.
different.
Okay, because I'm looking at different scenarios I take, and certain scenarios might be more based on 4 hours, base, and some of them also might be based closer to 10 minutes. But I'm also building the aptitude because it's like I don't really know, to be honest. Like, coming into the charts, like I could say I know because I know what I'm looking for, but like like you saying that also gives confirmation too, because you're also just looking for that structure point to be created based on that time level.
Exactly. Like that's what I'm saying. Like it's just, are you a scalper? Are you an intraday trader? Are you a swing trader? Because if you try to be a dynamic trader per se, which is like a mistake that I'll make sometimes too. It's like sometimes I'll want to take like an intraday scenario because it's just so clear. Then I have to understand that if I'm looking for an intraday scenario, that I'm using different structural levels compared to a scalp. So like if I'm at a scalp level, then I'm dealing with micro and minor intraday for the most part, and then I'm kind of aiming for like H4 targets, H4 candle or H4 targets, daily candles, weekly candles, etc. But like if I'm an intraday trader, okay, it's different now. The micro isn't as relevant to my major intraday scenario. You know what I mean? And that's where people mess up because they want to take a reversal for a major intraday scenario based on a micro transition. But I'm just like, okay, now in order for you to justify that, then you also have to say, hey, the micro transitioning into, or let's just say you have a reversal break of structure on the micro, then that's just a pullback on the scalp. And then once the scalp does that, that's just a pullback on the minor intraday. So like it doesn't make sense for me to then deal with micro if I'm dealing with a major intraday scenario or with just any kind of intraday scenario, unless everything else aligns. You see what I'm
Understood.
saying? So
Because
so
the
if you don't
markets are fractal. I feel like it's a
exactly, so
misunderstanding of like
mhm.
what markets are fractal is. Because I find myself doing like I think the two losses I did had are literally like that.
Yeah, you're trying to trade
It's
a M1 shift on a H1 position. Like if you're taking an H1 position, take the H1 invalidation, bro. Just win the trade.
understood.
Yeah, but you
But
see here, this
and I'm
probably would
also
have been a
building the what also creates the correct like I'm also trying to be drawing structure into my head also to like okay understand that this correct move was just probably order flow um with probably like a sweep and not a actual higher high
break of
or higher
structure.
low based on
Exactly.
actual yeah
Exactly. And
that
that's just the
that's what I
struggle.
feel like I'm
It's
building.
yeah, it's tough. It's a tough thing, bro, because everything is structured. Because like obviously in hindsight now, right? I could see this completely different. If I was to force, so if I force the reversal, I can justify this bullish scenario. But if I force the continuation, then I'm looking at this completely different now. Like if I'm now looking, let's say at an M5, then I can argue, let's just say, hey, we have order flow disruption here, and then I now have a pullback, and then I should be continuing lower to at least here. Right. So it just really depends on the framing of it because, and it's also depending on what you weigh each confirmation. It's just like, do you weigh momentum more than external structure? Do you weigh POIs internally or order flow disruption models internally more than the internal momentum? You know what I mean? Because realistically, I want to align momentum with the time of day with the external direction, right? Like if I'm going to take a counter trend scenario, it's usually because I see some high momentum. But there's two different types of high momentum. It's just like high momentum that comes from a news event or high momentum that comes from the beginning of a session. You know what I mean? So it's just weighing each confirmation to fit the type of model that you're looking for. And it's like easier said than done, right? But it's just whenever you're taking losses, you have to consider every single thing. And if you can model the loss, then that's perfect. Or if you can use the loss to improve the winner, then that's perfect too. But you have to be aware of what it is that we're doing. You know what I mean?
Yes, thank you.
Yeah. But yeah, that was an okay loss. Like it's just that's also the problem with fractal markets because you can, like I said, you can justify the internal reversal, but you can also justify the external continuation. So it's just a matter of uh, of the model that you're trading and how you're looking at the chart at the time. Because, like I said, there's order flow disruption here that I didn't see at first, and then we had premium pricing, so then we continue lower technically. But yeah, let's go ahead and go back to scenario number two. Straight here. Oh, wrong one. Okay, that's done. I'm gonna close that out. And so I had a really this is probably my trade of the week. I'm gonna be honest. I lost a lot of sleep because of this scenario. But it was perfect, man. It was perfect. So whenever we're dealing with like asset correlations and stuff like that, and like I think people call it like SMT and all that, like the the pairs that I would reference or not necessarily the same that I would see a lot of other people reference. Like the only real correlations that I care for, just based on what I trade, would be AU, NU. Oh, that's terrible. Hold on, I'll just type this up. The only correlations that I really care about, AU. The fuck? Why is this not typing? Right here. Cool. So AU NU, EU, oh shit, EUDXY, EGGU. Those are really like the only correlations that I really care to reference. And then if I'm like honestly, I don't really trade gold that much, but if I was to trade gold, it would be like gold and silver, obviously. But the reason why I like EG more than GU is especially just because of the time of day aspect. That's why I like that more than EU and GU. Whereas, let's say New York, if I see EU and DXY showing some type of behavior, then I'm much more confident in taking that position rather than trying to take a divergence between like EU and GU or trying to note that. I don't. It doesn't really matter to me unless it's more so like a daily time frame. Because I'll show you guys an example of that here in a bit. But the I really like the EGGU combo, especially during London session. So whenever I'm referencing GU and I'm referencing EG and GU, like if we're looking at this, these are completely different, right? Completely different. But I know that EG is pound heavy. So if EG is pound heavy and I have a bearish scenario on EG, then I'm realistically assuming GBP to go up, right? So this is a perfect scenario. Because I don't really trade EG. I don't know. I don't really like the PA, but if a setup is clear, then I'm 100% justifying this to go lower. Then I'm gonna try to find the inverse scenario for GU, because if that scenario presents itself, then I'm probably gonna see a high risk reward scenario because I'm seeing a transition from bullish to bearish on here, which means it would be a bearish to bullish on GU. So, just looking at this here, right? My scenario, right? This is kind of like a reversal scenario, but I only took it because of one single thing, and that is this reaction here. This reaction here is telling me the entire story. So, if I am looking at internal structure here, right? Obviously, it's a solidified point. So then we go into high, low, break. Therefore, as soon as I have that break, then I'm looking at this internal range as the internal range based on the sweep that occurred here. So if we had an internal sweep and we had the transition, that's a traditional sweep. So I'm having the reversal, or I'm looking for a internal reversal, and I'm looking at that via the Fibonacci and then the internal transition. So once I see something like that, this is clear cut, just simple, easy, straightforward traditional sweep. One of the best setups for a traditional sweep. Like I've given you guys the LGC model. Uh, I gave you that one maybe like 2, 3 weeks ago. This is a great sweep scenario, or at least from a reversal standpoint, where we have an unsubstantial new high, and then we have internal structural disruption, and then you have an internal transition after that. Then that would justify an A plus setup to go here, and that ended up going straight all the way straight. Actually, I don't know where the other image is, but this ended up going further. And how does that paint for GU? Well, it paints for GU because technically we are seeing a internal reversal, and this is technically a very high risk scenario for me. But if you actually go to the chart, I'll show you guys the after here. This ended up being pushed because of the news event yesterday. But if we go to, let me go to the actual chart to show you guys. Here. So the reason why I was forcing a scenario, right? This is like this is kind of exemplifying what I was saying earlier with AUD where you kind of want to force the continuation externally. Mm, excuse me. So if we're looking at this from a short-term standpoint, we can assume that this is bearish, right? Just because of the internal structure break before my scenario, I can assume that this is probably bearish because you have a lot of momentum coming to the downside. But this is like the trying to assume either we're going to I can justify maybe a reversal scenario here. Um, but at the same time, if we're looking at this from a major intraday standpoint, then if I'm looking at this major intraday standpoint, it could be bearish. But at the same time, right, I can assume that we have low, high, CBOS, and I have to assume this to go higher, especially with internal momentum in coming on board here. So if, if the internal move here was not as impulsive as it was, then I probably would not have assumed for this to have I would not have assumed for this to give me some type of move. But at the same time, I almost took a continuation here for Asia, but I don't really like trading GU during Asia. It has not gone well for me. And also, if we're looking at the internal structure, it never really gave me the transition that I wanted, right? And nor did it give me any structural disruption, like no lows were swept here, right? So I didn't get any structural disruption. However, we'll come back to that actually. However, the right before we had a news event, we did technically have a internal structural disruption here, right? And this is kind of what I talked about with Brendan in the public chat, where the only time I would trade a structural disruption is if it's within buying a discount and or selling at a premium, but that's a reversal of the scenario because technically the SD model is a reversal. So if I have a structural disruption, then I now have internal bullish structure. So if I have internal bullish structure, then this is 100% justified. Assuming we are to continue the H1, but the complication here is that the internal structure is still technically bearish, right? Because technically we have a high into a low. So that's the only complication behind that. So if this was to have not been a news event, and then I see another transition here, then I would 100% look for that, either that hedge position or just look for some type of sell scenario. And if I get a sell scenario that aligns as a LGC, then I can then transition to slower. But the only reason why I would take the scenario is because we are actually within the we had the EG scenario for one, and two, we had the internal SD. But more importantly, I'm using that EG relationship. That EG relationship is what kind of just catapulted that trade, in my opinion. So any questions on that? Let's see, let me go back to this. But yeah, the main reason for this scenario is 100% the EG here. If we had the EG transition, if we didn't have this EG transition, I probably would not have even looked for that structural disruption on GU. Cool. So is this making sense, guys? Is there any questions or concerns with that? Well, I guess no questions. Let's go ahead and move on. I did have like one or two more scenarios that I wanted to talk about. Let me see. I do want to go over my EU position here. Why I was selling here. So this is also similar to GU. I was looking for a buy on EU. I was actually before the high momentum came here at New York Open. I was actually looking for a transition here because at the same time, if we look at DXY, we are not creating a higher high here, and then EU technically is sweeping. So if this is sweeping, and I then have the internal transition here. So if I have the internal transition, confirm that sweep, then I'm looking for something like that. Unfortunately, I just didn't get it. Um, and after that, I was actually looking for a M15 setup where I'm even looking for this to give me an entry so I can then either take this as TP1 and then zoom out. I would want to take this all the way to highs if I'm being honest. But I actually got neither of those setups. I got neither one. I didn't get the pullback here because it didn't reach, or on my side it didn't reach here. So I didn't get that entry here. I didn't fill. But as soon as I saw this go ahead and take out TP1, then this entire region to buy just did not make sense to me anymore. So what I was now thinking, it's just like there's two different scenarios that can happen when I'm looking for a buy setup here. I'm either going to get filled into my POI, and then this is going to go higher, or this is going to go higher, right? And then give an internal transition, and then I can justify the other scenario, right? And I'm gonna go based on the reaction to the setup, right? That's what it means to say predicting versus reacting. Like if I was to have predicted, then I'm looking for this scenario, right? After this bullish break here, I'm looking for this to pull back and then go higher, right? Even if this break structure, you can even justify it and say, hey, we created a new higher high, we can then go lower and then go higher. Um, but that would be predicting. I'm going based on the reaction. So I know that if I'm looking to trade a buy position based on here, I know that my objective at the bare minimum is here. So if that target is to be hit before my entry, then I can no longer justify the buy scenario because I would now need a larger confirmation in terms of any kind of transition internally. So let's just say we had this whole scenario happen, then I would have needed this low to sweep this high and then see another transition to then justify again being bullish, right? Because we swept the high. So I have to be I play based on the reaction, and that's what I guess it means to react because you're playing with the reaction, like duh, right? I guess. But my scenario here was actually internal OFD. So as soon as I had seen, and there's actually like a structural disruption here too, if you guys can see it. But as soon as I saw this high being swept, and I actually saw a M5 engulfing as well. The M5 engulfing was the reason why I even wanted to look for an OFD or any kind of transition setup here because we swept the previous high, we engulfed, and we didn't fill my original entry. Therefore, I might be directionally wrong with looking for those buys. So my confirmation here was basically as soon as I saw this, this is the only reason why my scenario made sense. Because if we did not take this internal high, right, then that solidifies an internal low from a micro standpoint. We could even go to the seconds time frame if you guys want to see that, but I don't really go based on the seconds time frame anymore. Excuse me. So for looking at structure here, low, high, technically we could even consider this a solidification and then this a structural break, but I actually like this more because we actually fully broke the structural low here. So as soon as we broke the structural low here, this is the range that I'm playing. So I'm looking at the inefficiency with my invalidation just a bit above that. And I would have actually put my full invalidation here, but I didn't like how big my stop was getting. So um, I don't really go above like 10, 15, 10 to 12 pips ish. And I think this would have been like 13. Yeah, about 43, 43. So it would have been like about, yeah, about 13. So the reaction here into the breaker structure here, causing OFD, also causing structural disruption. That was my thing there. And I could have also been super conservative and kind of just used the entire region. But like I said, I just didn't like how big my stop was here. And then my risk reward would just wouldn't have made sense for the scenario. But this ended up going to my TP1, which is here, my TP2, which would have been the external low here. And the reason why I'm aiming for those lows now is because yes, we have the internal breaker structure here, right? We have the internal breaker structure, but we're bouncing out of a sell to buy here. And this we have a bullish reaction. So I'm still going to try to force the continuation to the upside, right? Especially after I'm at a discount. It just doesn't make sense to sell here, right? If I'm going to sell, I'm going to try to sell up here, right? But if I can't sell up there, I can only sell based on liquidity being swept, right? So if liquidity is being swept, I have an OFD slash structural disruption model, then I think this is 100% justified. But now the issue was like moving my stop. I can't move my stop here, right? I can't technically move my stop here because internally this is still bullish, right? Although I didn't get filled and I don't like that scenario, I can't move my stop loss until this breaks, right? Or until I have an LG, which was here, right? Once I have, I think this was break here. Once I had that, then I can move my stop here. which is not necessarily a break even, but I'm just kind of reducing risk there. So I was only able to move my stop until after we broke the slow here. So once we broke the slow here, then I moved my stop here. I had my chart stop, and then I actually looked for the inverse. I looked for the immediate scenario here, and I consciously took this because you guys know that after we take liquidity, you guys know that I don't like to take the immediate continuation to the downside. And I usually do that because if we just took liquidity, then I would assume that we would want more liquidity before we go before we go lower. So therefore, if this scenario here, which is a high low retracement, and then I actually saw a divergence here, which I won't cover, but if you have the sweet book, you know what I'm talking about. The fact that we had this reaction then lead into this low, and then reacted further, then my trail stop actually got hit there, and this ended up hitting a partial, and then the rest hit stop because I was still asleep whenever this was going on. But but yeah, that would probably conclude that. And now that I'm seeing the price action kind of start to stall out a bit, now is when I'm kind of inclining to not want to trade that much anymore. Unless we're kind of bouncing from liquidity side to liquidity, because now this is kind of where I'm probably not going to look for more positions. And the reason why I say that is because look, we just swept the high and we just swept the low. So we're technically range bound. So now that we're range bound, then I'm not really too worried about taking any more positions. So we may not see much for the rest of the year. But yeah, there was actually a really good scenario on UCAD this morning. If we look at this. So last night I was technically bullish on USDCAD up until this high, just because we swept the low. Then we had the internal transition. We went into the high. Then we swept the high. I believe we swept a pretty major level of structure too. Yeah, we swept that high. So if I'm looking then at the inverse sweep, there's actually a really good scenario here. And I didn't see it until after it had occurred. But if we're looking at a bearish range that's forcing a continuation from bearish structure, then if I'm looking at this internally, then this is the final low that led into the high that broke structure. So once that's broken, we don't have high, low retracement, and then this is a perfect scenario for this to go lower. So this would have been a super neat setup. But yeah, that's kind of all I have for today. I'm gonna go over some case studies, or unless you guys have some questions or concerns.
Yeah, I have a question.
Uh-huh.
Can we look into NAS real quick? I just wanted to see
Do you have some markups for me?
markups. Let me check because I'm in a trade right now, and since New York session is about to close in like maybe in a couple of hours, I want to see like
I mean, I'm
um.
not gonna justify your setup if that's what you're gonna ask me, but let's see what you got.
Alright, I'm gonna take a picture of it. I'm gonna send it in Discord. But basically, like I've seen this is what like I try to like guarantee to know like it's still gonna go into a bullish movement because of the structure. Uh, First I went to like the daily and then saw that it's completely bullish from today and yesterday. And I went to the 4 hour markup. Uh, Saw that the market structure is bullish, with higher highs. And then I went to the 1 hour, still saw that it's still bullish. And it took liquidity sweep. So I want to know like if it's guaranteed to still like go up.
Brother, there is no guarantees in trading. Zero, zero guarantees. Don't ever think that there's a guarantee besides a result.
Mm,
The only guarantee you get in the markets, bro, is a result. And we can only make decisions based on previous results. So this is bullish, sure, bro, but it's Friday. Like, I mean,
true.
I don't know what it is you're asking me to do here.
Uh, Technically, I just want to know like how can you confirm more about if it's like a bullish structure?
Okay, well, it depends on the type of trade that you're looking for. Like I explained this earlier. I don't know if you were on the Zoom earlier, but I was talking about depending on the type of trade that you're looking for, it depends on the levels of structure that matter to you. So like if I'm a scalper, then really the micro and the minor intraday are very important. If I'm an intraday trader, then I would more than likely have minor, major, and swing. Right? Major would, I mean, the minor swing would probably be my target, and then the minor intraday would be my entry time frame. So it's just like, it just depends on the type of trade that you're looking for, bro. You,
All right, I'm gonna study more on that. Appreciate it though.
yeah. You gotta figure that out. Like, it's like telling me like you want to like I don't there's no other way to go about it, bro. Like you like the if you're looking at a scalp, the daily doesn't really matter outside of if you're whether or not you're at a previous daily high or previous daily low. Like so the structure on the daily is not really relevant towards like a micro. Therefore, if it's not, then by default, the type of the whether you're a scalper, intraday trader, or swing trader, by default, that means that these three levels have different structural level or structural time frames that matter to it compared to the other. Like I don't know if that makes sense, but
Yeah, it makes sense. I just gotta study more about the techniques on it.
okay. Let's see. But yeah, let's go ahead and actually I had this last night. This is my continuation towards the downside, but I didn't take a trade based on it. So that's kind of in play right now. If you guys can see that, just because it's a buy to sell. And I mean, if you really want to get technical, like back to 70, this is currently playing out. So I do see this going lower, which would mean that this is going higher. But it just everything is choppy right now. I don't like this. So the fact that we didn't break this high is like what's throwing me off. So if we didn't break this high and we aren't going to break this low based on that, then I'm going to just have to wait for next week. And next week is Christmas, so I don't know if there will be any volatility, but yeah, let's go ahead and get into these case studies. Um, let's see, AJ. This is your first. Yeah, so this is so like if we're scalping, right? This is another I guess like a little bit of nuance with the type of trader that you are. If you're a scalp trader, the time of day matters a whole lot more than if you're a swing trader. Just because if you're a swing trader and you're taking entries, let's say based on H4, then because obviously major swing would be like your bias, and then the one above that, the weekly would be your looking for targets. So you would be taking executions based on H4. So the time of day doesn't really matter as much because you would have wider stops by default. And if you have invalidations, then the time of day just doesn't really matter as much as a swing as compared to a scalper if you're taking positions off of micro. So like here, you don't have like I'm sure what you're seeing here is like, oh, you see this LG, so it should continue higher. That's not correct. You don't want to look for you don't want to look at internal breaks as reactions. You want to look at low into high, low into high. And I mean, I don't see anything breaking, so this internal leg isn't even solidified yet. But at the same time, I have to look at the momentum here. So like yes, you have a high momentum to the upside, but you also have high momentum to the downside. So like if we have that, then I have to play based on the immediate move. Therefore, this is a reference point for me. Therefore, if you are to then have a reaction, then I can then have a sell move to the downside. Just because of this internal momentum being strong, because this is faster than this. So you have to consider time of day, you have to consider momentum, you have to consider your model, because I wouldn't even know what model you're taking based on this picture. Excuse me. Yeah, you see, like this now would have been for me like a reason to maybe potentially look for a sell. But yeah, I think I told you that yesterday anyway. And then this one, um, this is simple. Low high retracement. This is going lower still, at least internally. So if I'm gonna take a buy, I have to use the invalidation because this is technically LGC. So then if this breaks, then you now have an internal LG or internal transition based on POI, then maybe based on this high into low being broken. So now you have LGC. So then I can justify a move to the upside. But the internal here is still bearish.
The external definitely it did exactly what it was supposed to. The internal failed, and then the external followed the structure point because I still saw the low that it reacted from as a good structure point because it went high, low from the green, red, and then it got another high, low, high momentum to the upside after that. So it
Mhm.
did break lower, but it respected, and that trade would have been a win.
Mm,
So it was a lesson, a good
yeah,
lesson.
you see, yeah. So you see, like once that breaks, once it breaks, the low, the high that creates a low, once that breaks, then you have a reference point. That's where you look for execution. You need alignment for LGC. So where the here. So like you have the frame, which is the external LG, but now you just need the internal LG. And then you can see that there is a sell to buy internally, which would be your reference point. And then you have TP1, and then you can hold it higher if you want to. But that's LGC. Like that's the basis of the model. You're trying to trade an M1 transition when the M1 transition here is just the pullback of high, low.
Yeah, I was very well, I can't say upset, but cause I have like if from I want to say from the 14th to the 19th, I was looking at nothing but AJ throwing a accumulation schematic. And it's just like I did get like wins, but I feel like I hindered myself because of that internal versus external structure. Because they were like even to just give out the play after that by I think somewhere in the 19th it was easy on the 30 minute. There was just inefficiency where it flew like high, low, high after respecting and giving OFD, creating equal highs, and then it flew.
Mm-hmm. I
And
think
it
this
gave
aligns with
so many
the daily
entries.
too. Yeah, this everything is bullish on this. That's crazy, actually.
It gave so many entries. Like,
Yeah, but I mean that's
and
just a rule
it,
issue, bro. It's a rule issue. Like the reason why you're looking for an M1 transition to trade a intraday scenario is 100% FOMO. It's 100. You don't want to miss
mhm.
the scenario, so you want to take the immediate shift off of M1. And I'm just like, no, that's wrong, bro. If it's gonna give you a setup, it's gonna give you a setup. If it's not, it's not. Like, what do you do? Like, but it's 100% FOMO, bro. If you're looking for these scenarios here, which is I'm sure this is the one that you were looking for, you're like, oh, high into low, that's breaking. No, that's the CBOS of the M5. The micro reversal BOS is the scalp CBOS. The scalp CBOS is the minor intraday. I mean, the scalp or reversal BOS is the minor intraday CBOS. Like, you know what I mean? So like I have to anticipate this to CBOS, continue lower, but then once the high that creates the low is taken, that is the reversal BOS that I want to take. And this is universal to like any time frame. It's just like the different time frames. It's all going to be the same. It's just it all falls down to X and Y axes, right? Time and price. So if I have the frame, then I just need the internal transition to fit. And you can see like even if you want to zoom in after that, then that's when it makes sense, right? If you see the high that takes out the internal low, that without violating the external model, right? And if that then breaks the high, then now you can start to refine a bit. Now it's like where do you find your entry? Because you can either go based on the entire zone, which is 100% fine and valid, right? Because this is the sell to buy the overall zone, but the refined one would be to look for the immediate one that took, or the immediate high that took out this low, which would have been this. This is the high that took out that low, right? And that is where refined sell to buy. So either way, you're gonna get a very nice scenario. But like the risk reward here doesn't really matter. It just matters that you get the scenario and that you get a winner. Like you have to make sure that you optimize for the winner. I don't care. Like I don't care if I'm gonna get a 1 to 20 anymore if I have to lose 5, 6 times for it, right? Whereas if I could just take one trade and get a 1 to 3, that's just so much better for the psyche and so much better for progression. And even if you miss this, you can still use it as a frame. Like you got another entry here, like immediately after that, which would have been this, right? When you had LGC internally there. Because now structure has technically shifted bullish here. So now any LG is in alignment with the external. So any LG here, right, which is just that one, I think. I don't think there's any more. Yeah, there's no more LGs after that. But this is here even more conservative because if you want to catch the LGC, this would then be the micro aligning with the LGC. This would be the transition of the scalp, whereas this is the continuation of the micro. But like the continuation of the micro isn't always going to happen. Sometimes it'll just do the scalp and then it'll just kind of go, There's a lot of scenarios where you see the full transition and you just don't get a pullback. But it just, you have to
And
optimize for that, bro. You have to optimize for that.
that's my FOMO because I've seen it. Like
Yeah.
and I feel like that I can't taste that because that's not a guaranteed setup.
I mean, yeah, none of them are guaranteed, but you just want to have as many tools like on your side as possible. Like there's this I forgot where I heard this. This guy once said this it's like there's two reasons why you have anxiety with trading. And it's like you want to make money or you want to not lose or you want to not lose money essentially. Either you want to make money and you get anxiety and FOMO and stuff like that, or you're too protective of your capital and you become too conservative. So it falls down to one of two things. Either your your fear of losing money or you're too ambitious to make money. But like if you can control both of those and you just look at what the fuck is on the chart, then now you can start actually playing the game because you're playing the game. It's a game of probability. You know what I mean? And the second that you detach yourself from all that money aspect, then now I think now that's ground zero. That's level one. Right? Does that make sense? Yes or no? Does that make sense?
Yeah, I'm definitely gonna watch because I've been missing the scalp and minor intraday because the minor intraday did not give a bad setup to me,
But
and
that's not
I
the
think
point.
that's
That's not
why
the that's
I
not
would
the
look for.
point, bro. That's not the point, bro. The point is detachment. You cannot eliminate FOMO without detachment. Like that's the whole point. Like you will have setups day in, day out, bro. But if you still have this FOMO, like you're still gonna make the same mistakes just because of the anxiety that, either the ambition to make money or the scarcity to want to not lose money is gonna bring you. That's the point, bro.
Mm-hmm.
Detachment. That's what I mean also with like the whole December thing I talked about earlier. It's just like my mindset is way different now than it was 5, 6 years ago when I was first no, actually no, I've been training for like 8 years now, but when I was this was before COVID when I had that situation. But it's just like, am I gonna let a situation from 6 years ago withhold me from trading December this year? No. Like if I see the setup, I'm gonna take it. So it's all detachment, bro. It's all detachment. Just to at least give yourself a chance to play the game. That's because that's all we can really ask for. But yeah, let's see. What is this? Like, yeah, I don't want to get too spiritual on you guys, but I've definitely transitioned more to that side of stuff over the past like year or so. Okay, let's see. Where is the OFD? And where is your
I
entry
put
exactly?
OFD.
Where's your entry exactly? Like, where is the actual
It
entry coming from?
was
Is it this?
yes. OFD. I put OFD because I saw
But like,
that
what
it
what POI
was
are you
coming
referencing?
down. The PO, I pulled from the full structure point from the
Oh,
bottom.
okay, okay.
Like that's the PO. I put 50% um of that low that swept to the left because and I also showed if you look to the bottom left, there's another box there.
Mm-hmm.
So I was marking the higher low, and TP1 was the breaker structure that I was looking for after getting the scalping break. Because this, I feel like in this scenario was a lot different from the last one because I actually waited. So when I got it, I put OFD because I saw order flow going to the downside. Um,
I
and then
don't.
once we hit that
Do you know what
50%,
order
got that
flow disruption
reaction.
is? Give me the definition for order flow disruption.
I when it goes from bearish to bullish or shifts.
No, brother. You gotta study the. I think you have all the books, bro. So I'm gonna run through this one more time, bro. I run through this every week. The models are the basis of a failed scenario. Structural disruption is a failed continuation, right? The LGC is a failed reversal. OFD is a failed POI. And sweep is a failed break of structure. So OFD is based on points of interest. SD, I mean, LGC and OFD are essentially two sides of the same coin, except one is viewed via POIs and the other one is viewed via structure. So, like, this is LGC. I'm sorry. If we sweep the slow, then we obviously have high, low retracement. So if we have LGC, then I'm looking at highs that create lows, highs that create lows. There's internal high that creates lows. So once that breaks, then I have LGC technically. If we are sweeping a low before that, right? But OFD is based on a POI, bro. It's not based on. I mean, they're all shifts, bro. Every model is a shift, right? But this is the POI present. The reaction is shown based on how we react, which would be here. This is the reaction because you have the internal break after a POI. So OFD is after this breaks.
So OFD would be further back after that, bro,
It
because
would be
that's a failed
after this, bro.
POY.
Mm-hmm. Because you're showing a failure to continue order flow in one direction. So if that aligns with the external, then you have a type of LGC, but via the lens of POIs, order flow, etc.
Okay, I gotta tighten up my markups because I saw that as well
Yeah,
too.
yeah,
Like
and
I
that's
when I
also like
pulled
another
it.
big thing, bro. That's also another big thing, bro. Like I I I want like if I can see the exact idea that someone is trying to portray and understand it, that is such a big plus because that means that you can coherently and what's the other word? You can there's pretty much you can pretty much show me your bias without you essentially either confusing me or confusing yourself. So if I can see someone's just pretty much how they work their model and it makes sense just by what they're putting on the chart, that's such a big plus. Like that's how I know you're on the right track. So then how I'm gonna know you're on the right track is for one, once I can start understanding your markups with no question, and two, um, once you start, well, actually, that honestly that would probably be it for me. If I can start seeing that, then I can actually see where you would need improvements.
Yeah, because I can see the concepts, but I definitely understand like for me to have to explain it also should be kind of explained on the like I saw a SD where I put a breaker structure because I'm not really looking for a BOS. I'm just looking for the continuation. So
Yeah, but
it's
if
like
you
I'm
get this
seeing some.
reaction, if you get that reaction, it's probably too late to get in the trade.
No, I was already in it
Yeah.
from,
Uh-huh.
like I said, from the
Mhm.
50%. Because even then, all that was also more confirmation because I'm also just waiting for the reaction into the 50% low that we had from that leg. Then we swept the internal high before coming down. Then, like you said, we had We
See,
came down.
that's
We
SD
had
here. That is
LGC,
SD.
OFD, and then we just
Don't say
continued.
both of them, bro. Don't say both of them because they're not the same thing. They're the same principle, but they're not
My
delivered the same
fault.
way.
Well,
So
we had
like,
the LGC, then the OFD. But I was looking at the SD as the full leg, like the actual leg that we were working with before it goes. I was looking at that as an SD, but that's a bigger scale.
yeah, okay. But anyways, here that's SD. Therefore, internal order flows bearish. So this would be an LGC to the downside. So like, if I'm bullish, I need one of these scenarios to fail, which means that it fails either once you see this, but this would only work if this low is being held because this is technically the pullback low. And so if we have solidification here, then technically the pullback has been confirmed, but that doesn't necessarily mean that you're 100% bullish yet, especially after an SD, because this is opposing the narrative that you're looking for, which is bullish. So like you just have to either go based on high to low, high to low, high to low. And if that breaks, cool. Now you can maybe potentially have a setup. Um, or if that does not happen, then you will not have a setup. And I'm assuming this is a POI. So if there's POI support after that breakthrough, then that's also good.
Yeah. What would I mark that then instead of OFD? Because I see the
I
LGC
mean,
and I
I
saw
don't know what you're marking, bro. Like if I'm being 100% honest,
the
I don't know what you're marking with the OFD.
one because like if you just undo like your drawings, where you said if this breaks, then I can justify looking for it to go to the upside, and that's what I did. But like you said, that's not order flow disruption. Order flow disruption would have came before when the failed POI came.
Well,
That
no, it would
came
have happened
after the
after your
LGC.
entry. This would have been OFD.
Yeah, that which came after the LGC.
Um, I'm sorry, what? I'm you're
I
confusing me,
can't
bro. You're
draw.
confusing. You're confusing here, bro. You're confusing me here.
Yeah, I'll leave it alone then to come back to.
LGC is this, right? Because if the only other way to justify an LGC is if this was to have happened, but clearly there's internal market structure. So like the LGC would have been this to this, which is the same, which would have been the same with the order flow thing, order flow disruption. So
That's what I
like,
was talking about.
yeah. So like, but I need you to be a little bit more, just try to express your markups in a way where maybe you would think
Hmm.
someone else could understand. That's how you're going to be able to fix that side of the thing. Because then if I see that, if I can see exactly what it is that you're looking for, I can now point out what you should fix or
Hmm.
add or subtract, etc.
Okay.
Okay, let's see. Okay, you have CBOS. I would assume. Okay, see. So you see, like with this type of markup, I can read what he's looking for, right? So I can, if I can read what someone's looking for, then I can start to point out certain things. So like for one, if I'm going to take this POI, I don't like high momentum coming. I don't like big candles coming into my point of reference, right? Because I'm always like I told them with the AJ example earlier. Not that one. I think it was this. Um, Actually, I might not have it anymore, but oh yeah, I guess it was this one. But pretty much like, if you have a high momentum going one way, then yes, it's justified to look for this. But this is prediction. Once we start to come back down and we have high momentum there, that throws me off completely. I don't like to, even if this ends up being a winner, it throws me off completely because if speed is not in my favor, then I feel like either if this is going to work and it does work, then it's probably going to fail immediately. And if it doesn't work, then I would know exactly why. So why would I take a trade knowing exactly why it would fail? And it doesn't fit a criteria of me to enter. So I don't like the I don't like the high momentum coming down, especially when the high momentum coming down. Maybe if we zoom in a bit, I don't know if you showed me the internal. Okay, yeah, more. This is a better picture. Anyways, if we have high momentum coming down, right, then this probably on an M30 is either like a big wick candle or like or maybe some type of M15 engulfing or something like that. Like if I have a 15-minute engulfing that's opposing where I want to take the trade, then I'm not just going to take the trade. I'm going to have to wait for maybe a sweep and then a break, because then that would justify me being bullish again, and then I can look for an entry. But if the speed is not in my favor, then I don't want to. I'm it throws me off completely. I don't want to get involved. Because let's see if we can find that really quick. When was that? Tuesday? Here's the CHF. 15 Tuesday. All right, was this let me see. December 10th and 5. Oh, this is last week. Okay, never mind. Here, so for one, this is not bullish. I'm not saying it's bearish, but it's not bullish because we didn't break any highs, right? And there's an internal leg here, which came with unwilling. So if there's a previous high we failed to break, and then there's an internal leg, then realistically I should be looking for the pullback and continuation down, right? For one. But that's more so like a major intraday, which may not be too relevant to you, but it should be in the back of your head if you're wanting to trade that type of scenario. So like here, I 100% see why you're bullish. It makes a whole. I would agree that up until before your entry, this is bullish. Why? Because we have even a clear sweep here. We then have the internal transition. So this would have been even a perfect buy for me. So if I'm now looking at this internally, right? As soon as I see something like this, that I'm trying to see if that's an M15 or like something like that in engulfing or M30 wick candle. Yeah, you see, so it's a big rejection. So when I see a big rejection like that, that does not mean that I'm bearish, but that just means that I cannot be bullish right now, right? And that's something that I would love for everybody to kind of just um understand. It's just like just because you aren't bullish on something, that doesn't mean that you sell, right? Because if the structure, if my bias is bullish, right, and this is technically not bullish anymore right now, then that just means that I can't buy, but that doesn't mean I'm gonna sell, right? So that just means I'm unbiased. So I'm unbiased because of the high momentum internally, and it's technically bouncing out of a POI here. So I can't anticipate this to reverse until it reverses, which would then be after this break. So then this is when it would make sense to potentially look for the reversal side. So like I can point out like what would be wrong, but I would just say that this is a good scenario in a different environment, right? As long as the only thing that doesn't happen next time is that you don't have high momentum coming down. Pretty much think of what would invalidate your scenario. That's kind of what I'm getting at there. Would you market execute on a bullish engulfing on a break of a OFD? No. That's not how I trade, bro. That's not how I trade. I mean, if that works for you, 100% go for it. 100%. But I mean, I would have to see like what you're implying there, because I think what scenario was that?
Yeah, I think you were talking about the AJ scenario with the guy earlier. So when I was looking at it, I was wondering if you would execute on one of the engulfings, or you would just wait for the pullback and like set a limit and wait for the pullback.
It's December 17th. Oh, yo, Jalen, where was your scenario?
I had AJ and GJ.
This the last one, the AJ setup. Was that here? Or was that
I think it was
102,
closer to the right.
102, 102.7? It was right here. So you're asking if I would take that off the engulfing? Um,
I think there was an inefficiency
Technically, no.
after a
Technically,
sweep to the
no.
upside and downside.
Yeah, because this is like, so this is the LGC would be here since we're having the LG externally, and then internally we have the LG there. So this is a POI. So maybe, I mean, I'm not opposed. I don't trade like that, but I'm not opposed to a model like that where you take it off the engulfing. Because for example, as soon as the engulfing came on board, it kind of implied the internal sweep there. And the internal engulfing probably implies an internal breaker structure too. Yeah, because then it would have, this would have been where it bounced from, which is the final sell to buy. So you see it came back down there and then it went. So I mean, it just depends. It just depends if that's what you look for. Like, would I take it like that? Probably not, but that's not how I take my scenarios, you know? Yeah, like if you're comfortable with taking that engulfing as in that manner, then 100% go for it. You know what I mean? Because the only time I would trade based on an engulfing is an implied sweep, but that's like in the sweep book.
Gotcha. Makes sense.
Yeah, yeah. Yeah, this is actually a great setup here. Because this is actually like a trend shift. That's crazy. That's like the first legit setup for a trend shift here this year.
Because
Bro, these
I
these
was
yens
looking
move
at the
pretty nice, bro. I'm not
accumulation.
gonna lie. Oh, this is
Would
actually
you?
a yeah, this is great because bullish, but this is internally bearish. There's no disruption. There's no disruption, and then you have the shift after that break, which solidifies the low. So then once you have the internal move, that's that. And then there's another move there. And then you can aim for the high there, which is this is definitely taking out highs. But these yens move nice. I just don't know the preferred time of day for these. Like I would assume Asia session is really nice for these. That's like the issue too, bro, with like this is why I don't trade crypto. Like I could say I'm bearish on cryptos and stuff. Like this is what I was looking at like earlier this week. This scenario here, just because so you see Bitcoin took the high here and ETH didn't take the high. So that divergence plus the break and like also something you guys need to realize at by the time we get this new year, look at these 6 month closures, guys. These 6 month closures are very big, right? Especially with Bitcoin. Look at this. Look at this. That's crazy. This is a crazy engulfing. So I want to see this go lower. You know what I mean? Um, but that's why I'm kind of inclined to more of the bearish side on from a swing POV, right? AUD no, 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 no. I guess I'll show you a little sneak peek. Let me show you guys. This is going on the cheat sheet that I'm giving the free group. I mean the free group, the private group. Let me find it really quick. Um, nope, not there. Ah, here we go. This is a small, just I guess I'll show you a sneak peek, just because it answers your question. So I used like data from like the past like 3 years from a daily, weekly, monthly POV, and I put this all into AI, and I told it to give me all of the correlation relationships with every single cross, plus like gold and like S&P and there's 30 and all that. And these were the best divergences. So like if you're trading AJ, your best bet is trading NJ. If you're trading EJ, your best bet is GJ. These are the best. These are the high correlated assets, right? Which means that you could use asset divergence on them, and it would work very, very effectively. One that really surprised me was this one, S&P and US 30, just because obviously the relationship is better between NOS and SPX, but these are the top five best um, correlations that you can trade that you can use to correlate against each other. So if one sweeps a low and the other one doesn't, then there's probably a chance for a reversal, which means there's manipulation taking place. So then if you just trade out transition either based on either of those, whichever one you could fit a model into, then you can take a pretty decent trade. And then there's like the B tier, the C tier, and then the ETH tier. But I'm gonna validate this more with entry with other stuff too, because I have something else I'm gonna add to the cheat sheet is daily cycles. Like if so, let's say we can consolidate the time of day to 3 8-hour sessions, the Asia, the London, New York. So if there's 3 sessions and there's 3 things that can happen during a session, which is either you can consolidate, you can impulse, or you can manipulate, right? That's pretty much the only 3 things that can happen during a session. Consolidation, impulse, manipulation. One of the 3. So if there's 3 sessions and there's 3 possible outcomes, then that means that there are 8 combinations, right? So there's 8 hours in the day. There's 8 possible combinations. Therefore, I want to see if I can use data based on previous time in history for each pair and asset to see if there's a way to measure based on the previous 3 5 years of data on X pair if you have a consolidation and then an impulse for Asia London, then for New York, maybe you can anticipate a manipulation or another impulse, and there would be like statistics behind each one. That's like kind of I do this on my free time. Just because I thought that was really interesting, and if I have access to the data, then I could just use AI to do it for me. I just have to measure the thresholds for like what measures a consolidation, impulse, and manipulation, because that would really be the main thing. But that's all going on the cheat sheet, which it's only that I don't think I'm gonna offer that to the public, but it's definitely going for the private group. But this answers your question.
That's
AU
cool.
and
I
UJ,
appreciate it.
yeah, AU and UJ don't correlate like that. Actually, do they? Let's see. So like if you guys want to cross right now, I'll give it to you. I don't really care. Because I'm gonna use other data to see if it matches up with this too. This is over the past 3 years. Uh, AU and UJ. It is a negative 36. It's about a negative 50% correlation, which is not good. I would consider a good correlation, whether it's positive or negative, to be above 70%. But yeah, let's see what other pairs do you guys trade? Like GJ, let's see GJ. Since you trade GJ and UJ is probably the best bet. But I think there's AJ at the top too. AJ and GJ, yeah. But yeah, some of these are pretty interesting. I'm not gonna lie. I didn't know. For example, the relationship with EU and GU is not as good as I thought it was. That's like here, EU and GU. But also what kind of like threw me off too was like, whoa, the relationship between EG and GU is not as good as I thought it was. But that's to look like EG and EU, it's a 30%, and then EG and GU is less than that. So that kind of threw me off a bit. I'm like, okay, so that means that the only reason why my correlations work between EG and GU is because of the time of day, which is would be I would only use that during London session. All right, so this data it's really interesting. I'm not gonna lie, it's really interesting. So if there's 30 and then there is 25, right? But there's different ways to look at correlations as well, guys. Like it's like using like AU, EU, and EA. It's just like whatever EA is doing, and then whichever one of these you pick, or whichever one of these has a setup, and whichever EA favors more, but EA might favor AU more. But let's just say that there's a bullish scenario or there's a bearish dollar, right? And then with EU and AU, there's potential buy setups, but maybe AU is a bit clearer. So then if I look at EA and EA presents a decent short scenario, then I'm probably going to buy AU more. But if it's the other way around, if I have a decent setup with AU and or a decent buy setup with AU, and then there's a decent buy setup with EA, then either I'm going to take no trade or potentially EU could be the favorable one. So that means I could probably look for a scenario that maybe is not there yet, but it will then appear. So like using correlations is cool. You know, it's interesting. I'll just put it like that. It's interesting. Right, but definitely be weary of these 6 month closures, guys. Like, look at this. This is crazy. Like, we could really kind of see this melt, if I'm being honest, just because of one, rate cuts, but two, like there's structural disruption. So there's low, high, retracement. That's solidified. That's not broken. So like this could technically roll over. And you can probably see that better on the monthly. Not gonna lie. All right. And this looks very like support resistance vibe, but I don't know, guys. If you guys were to trade support and resistance based on liquidity runs or liquidity sweeps, if you get a sweep, then break of support and resistance, this will probably, like, let's say invalidation is here, this would probably work out very nicely. I would love to see someone make a model around that. But yeah, do we have any more questions, concerns, guys? Hmm. And also, there's only one last thing I want to start looking into next year, and that's the volume profile. I don't know if anybody's ever used the volume profile, but this is an interesting tool, depending on how you use it. Personally, I don't give a fuck about the point of control. I care about volume gaps, which is like empty gaps, because that means that potentially, let's just say my last volume gap is here, then this is a potential area for reversal. Just something to test out. Look at let's look at UCAD here. No volume gap in the premium, so no. I don't know. It's just a cool little tool. I don't know if it's something I'll incorporate next year, but there's something I'm gonna look into. But yeah, any more questions, concerns, guys, or probably wrap it up here? All right, guys. I guess no more questions. Appreciate you guys hopping on. I don't know. I don't know if we're gonna run a session maybe on Wednesday. Because I think next Friday is Christmas Day, I think. I think it is. Let's see. Just look at the calendar real quick. Yeah, so next Thursday is Christmas Day. The 26th. Yeah, I don't know. I might hold like a little vote, seeing if people want to actually do a session. If not, we could just do a session starting the new year. Or we could maybe do even Saturday next week. It just depends on people because I think a lot of people didn't hop on today. But yeah, also if anybody's listening to this and if anybody's good with content, um, definitely hit me up. Or anybody's good with content sales marketing, definitely hit me up. I might have some jobs for you. But yeah, other than that, we'll see you guys next week.